Very good morning. Before I begin to talk you through what's been going on in terms of the overnight and what to expect for the day ahead, don't forget we've got the latest Market Watch podcast from us, myself and Head of Trading Piers Curran. It's going to go out in a few hours' time, a bit later today. Actually, we're going to talk a little bit more about kind of psychology around trading. Going to kind of interview Piers to a certain extent about kind of his times in his career when he's stumbled upon a real challenging time or a big loss that he can recall that was kind of tough to mentally handle, and how he went about addressing that. All right, well look, let's get straight into it. We did have aftermarket earnings last night. Despite the conversation me and Piers had some of the speculation at the beginning of the week, no stock split coming by way of Amazon, but their shares trading up about 2.4% in aftermarket trade last night. So by the numbers, their revenues $108.5 billion. You heard me right. Versus expected 104.56, so a beat and obviously a phenomenally large number. Earnings per share $15.79 against $9.69 expected. Online store net sales were stronger, quarterly income was up, and they see Q2 net sales in a range of 110 to 116 billion. The previous estimate was for around 108.35 billion, so a positive forward guidance as well, upgrading what they see for Q2 net sales. So their shares were up higher, more than 3% at some point, but up around 2.4% at the close of aftermarket. Twitter, though, the opposite, down 11.5% for Twitter. They had been bid into the release. A lot of the expectation was that the advertising revenue kind of bump that we saw in some of the other related advertisers like Alphabet, Google, and Facebook. Facebook really had a good session yesterday. Twitter didn't quite stack up with the numbers. They did have a surge in digital spending, but actually one of the things that people were looking at was that they missed user growth expectations. User growth was up, it just wasn't up as aggressive that some were looking for. Also, they see Q2 revenues at 980 million to 1.08 billion. Previous expectations were for 1.05 billion, so a little bit extension on the lower end of that forecast. And the average monetizable daily active users, DAUs, came in at 199 million, which is basically in line with expectations, but that in itself was seen as a disappointment. So they got hit quite hard in aftermarket trade. On the earnings side of things, you've got ExxonMobil, Chevron, are kind of the big ones to look out for pre-market. In UK and Europe, you've got Astra, Barclays coming out the FTSE, BBVA in Europe, BNP Paribas coming out in France, Eni, another firm to look out for as well with the earnings today. So that is it. I'm going to let you get on with your trading day. Don't forget to check out the podcast. If you're watching this delayed on YouTube, don't forget to subscribe to the channel. And as I say, we won't be active so much on Monday for the UK holiday, but I'll try my best to get a briefing out for the week ahead on Sunday at some point. All right. Take care, guys.